Hello, welcome guys to My Finance Teacher. Today is 4th of June 2018. Let's talk about the coming Fed rate hike. Are you ready for it? And how can you prepare for it if you are not? Well, let's have a look at history of Fed rate hikes over the last couple of years and how that history correlates, if it does at all, with well, one of the things I really like to look at is gold price. So here's the history of Fed rate hikes. So far, we've had 6 hikes in the recent history since December 2015. And let's see what happened to gold price around those dates. So starting with December 2015, that's 16th of December 2015. What happened here is actually gold bottomed just around the date of the Fed rate hike. Before that, for a few weeks before that, gold price has been declining. And after that, we saw a really nice price increase from around the price of about, say, $1,060 all the way up to 1,200 and above, 1,000 and 1,240 or so. That's like over 20% increase over the next couple of months. Looking nice. Next rate hike was a year later in December of 2016. That happened on the 12th of December. And again, as we see prior to that, for a few weeks, price has been declining. It dropped quite a lot from around 1320 or so, all the way down to like 1160, 1150, even a couple of days after the Fed rate hike. So in this case, price rise started sort of in earnest several days after the Fed rate hike. And the price increased from around, what is it here, 1140 or so, 1150, all the way up to 1255, something like that. So that also looks relatively nice. That's how much is that? I'm not really sure, about 20% increase. Nice. Next Fed rate hike was on the 15th of March 2017. And again, we see a similar picture. A couple of weeks prior to that, this time this was a shorter decline, just a couple of weeks prior to the Fed rate hike. Price has been declining from around 1260 down to 1200, and then another increase from 1200 to 1300. That gives us, I'm not sure, around 10% increase, 9% increase, something like that. It's pretty nice anyway. Next one was, well, that was in the middle of June 2017, on the 14th of June. And there's a bit of a break in the pattern over here. Price has been declining just a few days prior to that, probably just about a week prior to that, and continued declining for another several weeks, for another almost a month, 3 weeks or so. However, if you could hold, let's say if you bought at the date of the Fed rate hike and could hold until you observe a nice rally afterwards, you'd probably see an increase of from about 1260 to about 1340. If you did buy at the date of the Fed rate hike, that would be your price, about 1260 to 1340. That's still maybe around 8% or so increase. That's not too bad. Although actually price declined for several weeks after the Fed rate hike. So this is one of the instances when we didn't observe this pattern of price bottoming around the date of the Fed rate hike. Let's move on. Next one was again in the middle of December, 13th of December, and the pattern that so far has been the most common one again took place when the price actually bottomed again. Around the date of the Fed rate hike, price dropped from around 1300 to 1250, 1240 in the couple of weeks before the Fed rate hike. And after that, there was a really nice run up to $1,360 per ounce. A nice increase, whatever is the percentage, looks like around 12% or so gain. Nice, in a couple of months. Another Fed rate hike was on the 21st of March 2018. And less distinct pattern here, but still pattern nonetheless, and it's sort of a similar pattern to the common one we've been observing for a couple of weeks prior to that. Price has been declining from around 1350, 1360, all the way down to 1320, 1318 on the date of the Fed rate hike. And a couple of weeks after that, price spiked back up to, well, 1360, 1370, 1365, something like that. So what can we say from looking at history so far? Well, with an exception of one example where price sort of continued to fall well after the Fed rate hike, with most of those other 5 out of 6 rate hikes, price actually bottomed just around the date of the Fed rate hike, and the subsequent gains were anywhere between 8% in a couple of months to even over 20% in a couple of months. So it's quite interesting because the next Fed rate hike is coming up relatively soon. That will be on the 13th of June 2017. And if the same pattern continues, if price sort of continues to drop close to the 13th of, until we reach that date, I don't really think that price is going to continue dropping that far below compared to where we are at the moment. Maybe price will drop to $1,280 per ounce or so, because unlike with previous Fed rate meetings, in this case, the futures show over 96% chance of a rate hike. So the markets are mostly pricing in the increase in rates. For that reason, I don't think the price of gold is going to drop that much further over the next, how long we have until that Fed rate hike, about a week or so. And again, if pattern continues, a couple of months after the hike, we might see gold price 10, 20, 25% higher than 1280, who knows? Actually, I do believe we're going to see a rally somewhere in the beginning of summer because of another reason as well, not only based on the patterns around Fed rate hikes. Actually, gold, as those of you guys who follow my cycles, who follow my videos, know, I think gold sort of follows these half-a-year cycles, and we are sort of around the time where this cycle should finish. And we count cycles from bottom to bottom rather than from top to the top. So from bottom to bottom, meaning that when the new cycle starts, we're going to see a rally. We're going to enter an advancing phase of that new cycle. And well, I have my hopes. Nobody knows the future, of course, but I have my hopes that this next cycle, the rally in this next cycle is going to be substantial. Well, if not in gold itself, then at least maybe in the miners. Look at GDX. This is GDX in front of you. That's a weekly chart. What do we see on the GDX chart? Well, weekly volume has been declining. So there's not much interest in gold mining companies over the last couple of years, since that big rally in after December 2015. So what it says is not many investors are actually looking at this market at the moment, and generally that is the time to invest. That is often the time to invest. When everybody is focusing their attention on the market, that generally happens after a nice rally. So that would not be the great time to invest. The good time to invest is when nobody is interested in this specific asset. And besides the volume dropping, everything else is just flatlining, which just tells you about the lack of interest in this market. The price itself is sort of stuck between this 200-day moving average, that's a 200-week moving average, and the 100-week moving average. We've been stuck there since, what, this is like October last year or so. And basically we've been stuck in a range between, well, that's like 21 to 24 or so on the GDX for the whole of 2017 and since the beginning of 2017. So we've been stuck in a range for quite a while. Volatility in GDX is very low, and generally low volatility periods are replaced by high volatility periods. So if this period is replaced by a high volatility period, the price might either spike up or it might collapse down. But I don't expect a collapse in GDX because as I mentioned in my previous video, have a look at that. I'll put a link at the top of the screen. The price a couple of years ago was not that far, maybe even at or maybe even below the all-in costs of production of gold. Not only all-in sustaining costs, but if you look at all the costs, including taxes and probably interest rates, the price might actually have been just under the all-in costs of producing gold. So for that reason, I don't really expect a collapse in price when high volatility period enters. I expect a significant price rise. So a GDX going back to, I don't know, about at least 30 would be nice in early summer. From 22, where we are at the moment, well, 22.3 to 30, that would probably give us nice gains. 22 point, say even 3, whatever. That's like 34% gains. Maybe that will happen over the next 3 months. Who knows? Over 30% gains over summer. That would be really nice. I have my hopes for that. Of course, there are no guarantees. Nobody knows the future, but there are some premises for that at the moment. If you like that idea, if you would like to see GDX at around 30 by the middle of summer, hit the like under the video. That's going to increase the probability, right? Thanks for your attention.